All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. A rip-roaring Fed reaction here to the Fed minutes. You can say we have 3 points lower, then 3 points higher, then 3 points lower, and now 3 points higher. You got to pull out a microscope to see it, and not really much of a reaction from the algorithms. The instant traders, it's just kind of being looked at as a non-event here. And, kind of looking at things, there's good reason. I don't think we really learned anything from that. A lot of the stuff that is in there, we've already heard before in the last couple weeks, just as various Fed governors have spoken and have shared their opinions on the global economy, on the U.S. economy, and what is going on here, with that. So it's a day full of headlines, a lot of very different headlines out there. It's one where the market vibe is pushing down a little bit, not enough to create a bear signal, but we are seeing a little bit of erosion in some of the market internals out there. But when you look, across the board, and you look at stocks that are higher versus lower in the market today, it's one of a story of quality. You see Under Armour, which is very quality after the last earnings report, trading up, Nike trading down. You have Apple down another $3, Adobe up $4. Just very different fundamental valuation levels there with those two. We see a lot of that out there in the market, here today. We also see oil getting cratered, down almost 3% here, and you can kind of see what happened. We had the oil inventory data come in. And, that came in this morning while I was on video. And shortly thereafter, Barron's released an article talking about the rising supplies in oil. And, if you look at the oil inventory data, we're seeing rising supplies in oil. And it's one of those where, the market can typically take rising supplies in oil with a grain of salt and move on from it. But when you think about what's going on in Iran and Venezuela and U.S. sanctions and the amount of oil that is no longer flowing out of those countries, and then you look at rising supplies in oil globally, it's wow. And this is with OPEC, still on some of their supply cuts and everything else. So, some concern there, and that hit not only the oil companies, the oil stocks, it hit the Halliburtons of the world. This morning we talked about the difference between a Chevron and a Halliburton. This move down in oil isn't hurting Chevron all that much. It's really hitting Halliburton, really hitting Schlumberger, EOG Resources, some of those that are a little more dependent on the oil and gas exploration side of things. The pure producers, it's not really having that big of an effect. Now, there is a decent argument out there. Right now we're talking about, or we see a lot of refinery closures that are out there more than normal during this time of year. So, both oil bulls can argue, hey, you know what? It just has to do with the refineries, but it's more than that. Out there, is it sanctions? Is it trade war? Is it? Yes, it's a combination of all of the above. But the drop of oil also hit some of the rails. You can see things like CSX, trading on down here today. Some of the other rails trading on a little bit lower here today. There was a report that rail traffic is down about 1.6% right now. And, that's normal. When oil isn't moving, you think about what these rails transport. They transport a lot of oil and gas, right? And when there's a little less of that, little gross supply of that, the rails don't transport as much, and so sometimes we see them get hit. But if you look, today is one of those days where the sectoral breakdown in the market is rather interesting, and I'll get back to it here in just a second. But let's go out and take a look at the challenge here. I'm getting the report on my other screen right now. As I mentioned this morning, I'm looking for Facebook to trigger, looking for Honeywell to trigger, possibly. Some of the stuff that's had 3-7 crossovers in the last few days hasn't actually created a trigger. For example, Raytheon, right? Here's Raytheon, and it triggered bullish on the 3-7 here to the upside, but did not trigger a Katie or a signal for the algorithm for the challenge. Was up yesterday, down a little here today, but still not creating a trigger here for it. In fact, it's actually a little more in danger of triggering a bearish signal than a bullish one. All right, looks like no new signals. Let's take a look at Facebook here. I talked about it this morning. We need to see the 3-7 cross, and we're a little shy of that here. Here today, not too far. It's only 12 cents, so it's pretty close. But not there. Then Honeywell. Was one that, the last 2 days, if it's able to hold a gain, it probably triggers, but it has not been able to hold a gain, so we have not seen a trigger here come in for that. Netflix is one that has some 3-7 crossover action on it here today, but, you see it's trading in the low side of its, recent range, so, whipsaw chance, a little too great, a little too grand. And as I mentioned this morning, if we're talking about a neutral market vibe and a market that is not trending, right? The number of signals are going to lessen a little bit, and the accuracy of the signal is going to go down a little bit. Here as it is absolutely looking for trend, but this will resolve itself out. It may take another week or two to see it resolve itself out, but I fully expect that it will. And this isn't the type of consolidation that looks like it's going to be a long one. It's just kind of one of those minis that we see during this time of year quite often. So that leaves with JNJ for the challenge. And JNJ this morning, yesterday had a little reversal on the little news, not a lot of volume. Today sold off early, has been bought back up the rest of the day, along with healthcare. I mean, if you look at the XLV, we have seen money come into healthcare all day, and healthcare is in the green. So, J&J got a nice little reversal here on it. So let's go take a look at it. Price of the option here on J&J is $172. So we'll go plug that in here at $172. So down about $230 on the option. Even though, we entered the option when the stock was $138.60, and the current stock price is $138.55. And if I update that in real time, the current price of the stock is actually $138.68. So, since we entered, the stock price is up 8 cents. Option value is down about 15%. About 18% there. We talked about the implied volatility on that, and that's the price of a Monday morning post OPEX entry, and nothing too unusual there. But would be nice to kind of wake up and see the stock hold on here into the close, and then tomorrow morning get a little boost on it. If it doesn't, if the option's in the green when I jump on tomorrow morning, I'm gonna have to pull it off here with our auto exit date. If it's in the green, that does give a few more days to be able to ride with it. And it's still, from a chart standpoint, it's still set up very nicely. So hopefully we get that, that run here. In that, would be nice to see that run up, and nice to see another trigger come in on a Honeywell or a Facebook, or even a downside trigger, come into play out there to take advantage of. Okay, so that's where it's at, and where it is trading here, and challenge just a little bit north of 3,000. And grinding along here as the market kind of chews a little bit. Now, earlier this week we talked about some of the events and some of the things that were happening this week, and some of the big stuff. And I mentioned that I thought, Fed was going to be important, and the market may react, may not react. But when it comes down to it, the biggest piece of data, the biggest piece of information that the market is going to get this week, that is known that it's going to get it, right? We can always get something out of the blue. Comes down to the data on the flash manufacturing, flash service numbers that we are going to see here tonight. And it looks like Econoday doesn't want to come up here for us. Let me refresh that here. Try again on it. There we go. Conorday's just slow. I really like this website for the economics, but man, sometimes it is a slow one. But anyway, we'll have Japanese PMI manufacturing flash tonight, which will come in. Look, we don't see the market react to Japanese data very often. Even last night, it just didn't react to the trade data here in Japan. But anyway, then we'll have from the Eurozone, France, Germany, other areas. We'll have the Eurozone composite number come in. We'll also have the ECB minutes, which, let's face it, the ECB hasn't said anything new in 2 years. So that'll be coming out. And then we'll have the U.S. data shortly after the market opens tomorrow. What's significant about this data? Well, it's May data, right? This isn't April data. This isn't March data. This is May data, the first kind of look there at the May data. And I do think it's going to be a market mover. And, we'll determine, kind of which way the market gaps here tomorrow, and could have a pretty big say in the trade for the next, 6 to 10 days here in equities. Okay. So anyway, that's kind of what is happening there. Now, I was asked about Tesla here, and I was asked about it yesterday, and there's that interesting stock, and I mentioned, my note this morning, another downgrade here this morning. This thing has just been cleaned out, right? This is one of the worst performing stocks of the year, and this is one that had held up so well even during the sell-off, late last year. It had held up phenomenally well. But since then, it has traded down in a channel, and then earlier this month, it broke that channel with a vengeance, and it's in the plunge state, right? One of the things about a stock that goes into this plunge state, right, it has its downside channel, and then it breaks that for a steeper downside channel, is oftentimes there's a V-shaped rebound that takes it back to the channel level. So in this case, somewhere in the 220 to 230 level, right? For some sort of kind of quick V-shaped snapback. Is that going to happen with Tesla? Well, we don't know, right? We don't know. But one of the things that I've looked at is that, okay, is there a cheap way to play something like that happening, right? And there are a few ways to play something like that. They're not all super cheap, but and they're too expensive for me to want to jump into them just yet. But if you look at something like a call spread, something like the 215 to 220, right? You can get in this for about $1.30, $1.40, and it can be worth $5 if you get that. Why won't I get in yet? Well, When these happen, when you see these kind of just everybody jumping ship, blood in the streets, this is the type of sell that typically ends on volume and typically ends on really bad news. Now, it's had bad news, right? It's had bad news. But has it had really bad news? Yeah, we could argue differently. But what hasn't it had? It has not had that kind of monster volume day. Yes, the volumes are high. The volumes are very high. But it has not had that kind of double or triple, kind of volume that takes it up into this kind of 30 million, 40 million area. So for me, to want to call a bottom or just bottom pick a little bit with Tesla, that's what I want to see. I want to see a day where it has that type of volume, or I want to see it kind of having one of those days where early in the day it is down huge and, it already has 20 million volume and it's starting to rally on back. That's what I want to see. When I see it, I'll put it into the message feed or jump on video and talk about it. I'll show you the trade that I make on it if and when that happens. But that's what I'm looking for, right? Personally, I'm bullish long term on Tesla. I think they're a very unique, very interesting company. But right now, the news headlines, the fears are probably greater with Tesla than they are with many. You have to go to something like a Transocean or a Noble Drilling to find such a bearish headline-laden story out there in the market that, and that's what Tesla has right now. And it's, it's very damning here for it. It has investors running for the door. And ultimately, do I think that'll change? I do. I don't think that we're going to be talking about it returning to its highs anytime real soon, barring some sort of monster major announcement. But, the reality is some of the competition is heated up, and, there's talk of it continuing to heat up, so they do have to face with that a little bit. Some of the China stuff is not helping them. Some of the the battery stuff, it's not helping them. The analysts aren't helping them. No matter what way you look at it from a Tesla standpoint, the big bad bearish case, which is always does it have enough cash? It's a negative story. It is a bear's delight in every one of those facets. So to want to be a buyer, I need to see that monster mega volume come into play. Could I buy a call spread on it now and ride it? Sure, but it's just one of those where if I buy the 215, 220. Yeah, I could pay $1.30 for it and possibly be worth $5. But one more bad day, and that's going to go down to 80 cents, right? Now I can buy the 200 and 205 for $1.30, right? Two more bad days, you can see the price just shifts down. I don't need as big of a bounce to pay it off. So I want to time that up. And what do we typically see? Well, we typically see big volume. That is that is the bottom. We see this in stocks on the top too. One that I have a very vivid memory of happening here was in Google. Right, and let's just go for a little longer term chart here with Google. Back here in 2008, but this was a stock that had been trending up and trending up and trending up, and then it just went parabolic. Right, just went parabolic right here, and just zoomed on higher. And I remember even one of these days, Arthur Hill, who does some writing for stock charts, he wrote a piece, and the only thing he had was a chart of Google and a line going straight up with the word "really?" ? Right, that's all it was. Really? ? And just a monster move. And you can kind of see how it ended. There was huge volume up here at the top, and boom, you got that real hard drop. And so, I expect this to happen with Tesla on the reverse, but the fact of the matter is we could still be just in this stage right here for Tesla, and nowhere near this top stage or this kind of reversal or pivot stage here for it. Until we get the volume, that's where I look at it. At. You'll notice the real downtrend didn't start for Google until it started to set some lower highs. Very normal, right? Yep, you'll get a flash down, a snapback, but the real downtrend tends to happen off of lower highs. Okay. So anyway, that's just quick comment there on Tesla. What I'm looking for to want to go out and trade that here. Okay. All right. Looks like as I'm talking, we're seeing the market snap back a little bit, push on up above the Fed highs here. Not in a huge, massive way, but market is threatening to possibly go green depending on which index you're looking at. Small caps are lagging here today, but not to a degree that really changes the dynamics all that much here. And you look at what's dropping today, and kind of some of the retail names after a couple retail reports. That's going to weigh on it a little bit. Some of the transport names, after that rail report, that's going to weigh on the IWM as well as what we saw with the oil inventory data there. So that kind of accounts for some of the small variance, and when we kind of zoom out, we're not seeing any larger variance there. Thanks for hopping on. Have yourselves a great evening, and we'll talk to you tomorrow. Take care.